Yes. Morning. Ohio. 해주세요. Hope you're all doing well today. Without much further ado, let me go to the psychology tip today. Use technology wisely. Leverage tools for analysis, but don't let technology override your decision making. Interesting. Well, I hope you've all been good a couple of days. Today has been good. Japan bank holiday all day today, and at 10 a.m. you're expecting some German PPI month to month. And one thing that I've realized is from yesterday's analysis and whatever, I can take a trade during pre-London. Since I did not use to take a trade during pre-London, I usually used to wait for London Open and I would grab a trade from that point. But yesterday I came to a conclusion: if there is no any yellow folders or any news during pre-London, it is good to take a trade during pre-London. But if, like today, see at 10 a.m. this is pre-London, and I will not be taking any trade. How was your day yesterday? Market was behaving beautiful price action yesterday, and I love it. So we see from this place here we have established a breakout rule. Okay, we turn the flip, but now we ain't gonna enter the flip because we are in there's a inside of this order block. Not unless this order block and this order block be broken, like I explained yesterday, I am not going to do anything. Before I forget, on the fundamentals today, federal funds rate, FOMC economic projections, FOMC statement, FOMC press conference. We'll be having this today, and they'll be coming in at 9 p.m. and I'll be looking forward to having a good night's sleep. But this is the major thing that is happening today, and the likelihood of the market consolidating today is so high. So yesterday we saw this price action with this candle closed as a bear hammer, and this candle closing like this, there is a possibility for us to fill this candle up, at least up to that point. So we'll have to know about that, but that is a possibility. And so we are saying that yesterday the market did what? Yesterday this was the sell side liquidity of Monday. Tuesday what the market did was take out the sell side liquidity the previous day, so the possibility of us continue pushing up, the momentum is high. Looking at the weekly, the way it is performing, the weekly is bearish. As of Wednesday, the candle is bearish. So I believe today during the London session, according to what I'm seeing on the daily, we may have a taking out of the buy side liquidity of the previous day, that was yesterday, Tuesday. And then during FOMC, let me do that real quick, take out the buy side liquidity. Then during some market comes and do some consolidation, and during FOMC we do something like this, we fall down. That is yet to be seen. So now what we are waiting on the daily is the 2 count. The 2 count hope it forms around this level, and we most likely going to push and push. On the 4 hour we are seeing what? The opening of this candle. Switching over to the London session, 4 hour 5 p.m. candle, or to do you bet it is the 8 a.m. candle. Yeah, and yeah, we have established a 3 count from this order block, and we have a confirmation of a buy entry over here for the market to continue pushing up. We got a break of this OB over here, and remember yesterday we were saying we have a tug of war between this order block and this order block, and this order block market came in and it was able to prevail, though we almost closed below it, and that would have geared a lot of consequences. Thus the market would have continued pushing down. So according to the 4 hour right now, what I'm expecting is the market to at least come a little bit below and go with this 4 hour buy and continue the push up. That will be beautiful. So I'm bullish on the 4 hour. Switching over to the 1 hour. Switching over to the 1 hour, we are seeing that there's a major fair value gap here with an OB over this place, and the market has not closed below. What the market has done essentially is it has come and grabbed some liquidity on this OB over here, and we may have a little bit of some struggle on this other block, but yeah, we may as well continue pushing to the upside, as you can see here. We're also seeing the markets reacting on this fair value gap, and it is beautiful to see it. Switching over the 30 minutes. You're seeing the same case up from the case of 1 hour 30 minutes. So it's doing the same thing, and if you are taking your trade at this point from this fair value gap over here, the stop loss below this order block over here, targeting this area, you're looking for a 1-to-4 risk to reward ratio, and that is all about how many pips? 6-7 pips for me. I'm not looking to take that. I want a little bit of a pullback into this order block for me to continue pushing this market to the upside. Yeah, that is what I'm looking for. Switching to the 15 minutes, we are seeing the same OB at this point. We are having an OB at this point, and this OB is looking so much resilient with the current price. And last year we can see that we are seeing that market created a 3 count rule from this order block over here today, and let me adjust that really quick. As I was saying, I wanted to adjust these levels. Good. So on the 15 minutes we get to look at this price as it prints out, and we saw there's an invalid buy over here. I would love this market to come into this place and test this to continue pushing up, and when we switch over to the 5 minutes, we get the coincidence. Yeah. So what I was talking about, that if there is no news, so this trade yesterday occurred during pre-London, and I never took this trade because what happened was it was pre-London, so I was like, okay, for me I trade London Open. I would love to wait for the London Open. Remember yesterday I was talking about the break of this OB and the retests to continue to push of the market down. Yeah, but I managed to take a trade from this position, and yeah, and it was a good trade. Switching over to the 5 minutes, what do I expect on the 5 minutes? On the 5 minute, I'm expecting the textbook buy and textbook sell. What do I mean? Based upon the Asian buy side liquidity and the Asian sell side liquidity, what I'm aiming for is the market coming and taking out the buy side liquidity, maybe come at this point, then sell. That is the textbook sell, coming to this place, and that is the textbook buy. Yeah. As for me, what am I seeing? As for me, what I'm seeing is the market coming to this place, then we can shoot to the upside. That is what I'm seeing first of all, and yeah, but I'll be wary of that position, since if I enter this place, my stop loss is likely to be the likelihood of my stop loss to be huge is significant. Yeah, I'll just have to wait for the market to do its thing, and the projection as it forms will tell me exactly what will happen to it. Yeah, the market projection will tell me what's up. Since we are seeing that the New York high was taken out during the Asian session, and the price does not want to go below that point. It is very, very, very interesting. Yeah, but once again, today is the FOMC. We may see a lot of consolidation and manipulation and fake outs in the market, so be wary. Yesterday, as the market was coming to an end, we are seeing also this build up of the consolidation. So range is a consolidation of the market build up for it to decide where it's going to head to. And finally, we saw that during the Asian session, we had a break of this build up, and market does not want to go back inside that consolidation, and that's why we're seeing nothing that is happening. So with that, I would love to leave you with telling you not to break your own rules. For goodness sake, it is your own rules. As for me, I'll be waiting for the market to do its thing. Let it do its thing. Yeah, and thank you all. Bless.